All right, traders. Hope you guys are good, and welcome to this week's segment of our weekly market breakdowns. So, as you can see now, we are on oil, and we're in this uptrend, long-term uptrend. So, the last time we looked at oil, I actually called this buy. I think it was from this place, this area over here, and it went up beautifully in our favor. So right now, as you can see, the market has already even tapped this liquidity over here. Right now, we are on this zone right here, and it's actually the zone that is in control. Right. So we know that when we have a higher time frame zone and control, on lower time frames, what are we looking for? We are looking for a change of sentiment. Now, I'm not saying that we're going to see a drop in the price of oil, because I think that's mainly dependent on the fundamentals around that. I think if we took an analysis of fundamentals, then we would be in a position to make a more informed decision. But in as far as technicals are involved, this is a signal that we will get a potential bearish movement soon. You get what I mean? And then we have this opposing demand right here. We had our break of structure here. There's incentive to go back there because there's an imbalance here. So this is what I see on a higher time frame. I see that supply is in control. We've taken out liquidity, and if we get a change of sentiment on a lower time frame, then it will be a signal to sell. Considering technicals, let's go to a lower time frame. If we go to the weekly, then the higher time frame trend that I was talking about, the uptrend, you can see it more clearly, especially periods where we had a correction, an impulse, a correction, right? And then an impulse. Now we're in the correction phase. And I think we ought to expect another wave of an impulse, right? This is a potential area of liquidity because it's a high, right? And then this is the liquidity, or this is the low that we need to take out for us to start selling, right? We can only buy with low risk if price violates this monthly supply and breaks through it. And then if we zoom out, you'll see that there's a supply zone here, a weekly supply. So that's why, that's where I think we will get the potential correction. So what I think the market is doing right now, I think the last wave, technically speaking, the last wave of buyers are buying right now. And obviously, because of the third touch principle or whatever, retail traders are lured to join in this trend. That's the logic, right? So as more and more people are led to join in this trend because of the uptrend, the logic or the understanding behind it is that we gonna take out liquidity. So this is where a lot of people join. After taking out liquidity, we're gonna get a drop. So that's how I kind of figured it out, because most of the time, the like I said, latecomers are usually retail traders. So what normally happens is that you get retail traders lured into trading into a specific direction, all right? And most of the time, those directions go towards institutional levels, right? And so if you have a large volume of retail orders going into an institutional level, what this means is that you will get liquidity, right? Liquidity going into those levels where institutions have their orders. And what this does is it creates incentive for them to now trade in the opposite direction, which is why most of the time, if you get institutional levels, especially at extremes, most of the time the reversal is usually violent or strong in nature. Why? Because it's a large volume of retail traders trading towards an institutional level. So that's what I think will happen, right? If that does not happen, then I expect a breakout of this monthly supply, right? This is if oil prices are going to continue going up. That's what I think will happen. So for now, I'm looking for buys. what can you do in the interim to take advantage of this 2000 pip movement? If we go to the daily, you'll see that you have a break of internal structure. So a change of character here. And then you have this potential zone right here that's currently forming. So basically, when it's like this, I'm waiting for two things. Number one, I'm waiting for the market to break through this opposing supply, right? Still valid, still valid. Just put aside because it's a point of interest. I'm waiting for the market to break through this opposing supply to confirm the zone, number one. And then number two, I'm waiting for one candlestick to at least consolidate away. And then we will buy the retest, right? So that's how you can take advantage of the movement towards the upside, right? We also have this opposing supply, which has been retested once. I'm talking about this supply right here, right? It's also another level that could like potentially prevent us from actually like reaching this target right here at 135.09. But yeah, I hope this is straightforward. I hope this is simple. The assumption is that we or the plan here is to continue trading with the uptrend until I get a reversal, right? But like, I'm not oblivious. Like I said, monthly supply is still in control. So we are in a seller's territory. Even if you look at the supply and demand curve, we are in a higher time frame sell territory. So higher time frame territories obviously are more significant than the ones on the lower time frame, which is why I don't necessarily think that this is a high probability setup, right? But like, yeah, that's my thoughts on oil. Let's move on to another pair. So currently now we are on Nasdaq, and the last time we looked at this pair 2 weeks ago, I was saying that there's potential that we will get a break towards the downside. So I was kind of in between because I was waiting for the market to give us confirmation whether we should buy or sell. So I think that now we've gotten our confirmation. So first thing you need to know is that on indices, it's not necessarily advisable to sell long term. Why? Because in the long term, the uptrend always wins. So indices, the thing about them is that long term, they are buying, right? But you can take advantage of potential corrections. So for me, one sign of a potential reversal was this breaker structure over here, right? So the sell is confirmed. And then we had this impulsive movement towards the downside. We had a correction, and now we have this other impulsive movement, right? For zones, we have this zone over here, and it's been confirmed why it's broken through this opposing zone. It's broken through structure. It has a imbalance, strong departure, and then yeah, and then we have another break of structure right here. So price is continuing towards the downside in a strong way. So question is, where do I potentially see the market reversing? For me, I think, and that's a very strong opinion, this is my opinion, I think the potential area we can get a reversal is this level right here. And then we have this area of liquidity also. So the market could easily just take liquidity from this area and then move towards the upside, right? You see, the other thing that I don't like about this is the fact that usually the supply areas that you'll find here don't have imbalances. So that's one thing that separates Nasdaq from currencies. The fact that with currencies, when price moves away from a zone, it leaves a clear footprint. So you in a sense know what you're dealing with. You know where to expect a level. You know how to grade them. But with indices, especially Nasdaq, you don't really know, right? So another area where I think we could get some sort of reaction as a result is this flip zone over here. Those are my 2 cents on Nasdaq. Let's go to the lower time frame. On the lower time frame, like I said, we have this trend over here, but like we have another internal trend. Which trend am I talking about? I'm talking about this trend over here, right? So with this trend right here, we had this consolidation over here. Literally, like I said, we have this area of liquidity right here. And as you can see right here, it acted as a block because price wasn't able to break through it, right? And now we're in a point where price broke this low right here and could continue towards the downside, right? So if this is a liquidity grab, what I'd want to see is a strong bullish candlestick going towards the upside. So if we have, let's say Monday when the market opens, we have a strong bullish candlestick, right? Then I'll believe that, okay, maybe this is our time to go bullish. But if that does not necessarily happen, it means that we are selling. Is there an opposing level? Obviously, we are in an area of demand, but this demand has been used up because initially before this, we had 1, 2 retests, and now we recently had 3, 4, 5 retests. So it's used up. There's a high chance that price will break through it, right? And then now we have this zone over here. Like I said, it's not a high probability zone, right? If we do get our confirmations, it means that we're going to sell and use this as our first take profit. But a zone that's very interesting for me is this one right here, purely because we have an imbalance before it. You get what I mean? We have an imbalance. It has a wiki base, so it means that this one right here, that's my ideal daily zone, right? This is where I see price going in the long run. It might reverse from the zone, but like this is, yeah. So yeah, I think we should sell Nasdaq. Gonna look for entry points with our students and with our VIP clients. But like, yeah, let's move on to another pair. Okay. This week it looks like we started with the indices, right? Another thing or another pair on my watch is the dollar index. So the dollar index, I don't know what to say. We are bullish, like it's a clear bullish trend. So it's only natural for us to look for bullish patterns, if I may put it that way. We have these equal highs, relatively equal, have this area of liquidity, right? And if you just look at this candlestick, I just want you guys to bear in mind that this is not a closed candlestick. This is a monthly, we're on the monthly chart, so this is a monthly candlestick, and we're still in the beginning of the week. I'm recording this on the 7th of May. So by the way, do not necessarily consider this, but if we look at the structure and how it's set up currently, it would suggest that price wants to break through this level, right? The reason I'm saying this is because this was an area of supply and the market tapped it twice, it held, but like the more you retest the level of supply or demand, the more used up it becomes, and then the less effective it becomes. So if you have multiple retests on a zone, it's most likely going to get broken through, right? So in this context, the only valid area is this demand zone over here. That's the one that's still intact. So if we consider the fact that we've had a strong departure away, I think that my other level of demand is this one right here. Yeah, that's where I want to start this conversation. But like I said, we have liquidity here, and then we have an opposing level here, which might hold, but not necessarily, right? If we wanna like determine the probability of it holding, then we need to grade it. There's a video that I released on how to find the best areas of supply and demand. If you still haven't watched it, make sure that you watch it. But basically, one of the things that stand out to me that makes me believe that this area might not necessarily hold is the fact that we don't have a strong departure or an imbalance departing away from that level, number one. Number two, is the fact that we have multiple basing candlesticks, right? And then number three, it's an immediate level of liquidity. So if you look above that area, we have liquidity in the form of a swing high. So another area that could hold price is this level right here. But since these are higher time frames, these moves take a while to play out. So keep that in mind. So this is the first scenario. The first scenario is that we go here and then maybe until here, retest, go up, right? Or that we eventually gonna break it and then move towards the upside. Or an extension of the first scenario. So these are the scenarios that I see playing out on Europe. I'm on the dollar index. All right, let's go to the weekly, and I think we're gonna end it there. Like I said, you can see that price is attempting to move past this area. So assuming that this area, this monthly point of reversal, we'd have to zoom out. Yeah, it would have to be Mklambe, the zone over here. Because it is the one that has an imbalance. If you look at this one, it has a lot of liquidity, could easily break through it, right? Right. So yeah, that's my point of interest. If the price manages to break through that zone, then I'm continuing with my bullish bias, right? But like, yeah, you can see, and then these are the nested potential areas of demand. So that's what I think is happening on the dollar index. Let's move on. Move on to AUDCHF, as you can see right here. We're in a correction phase, recently broke out of correction phase of a long-term potential uptrend. All right. So I think for me, the turning point was the turning point was here when we had a break of structure. Right. The classical situation of, okay, break out of structure and then come back to retest an order block. So that's what we had here, right? And then if you go towards, like if you look towards the left, there isn't any level of demand that has an imbalance. That means we're looking for areas of liquidity. And straight from the bat, you can see that we have our equal highs there. And then we have our equal highs here. I don't necessarily recommend that you trade from like areas of what you call areas of supply that have immediate liquidity, right? So if I'm being honest, the zone that I'm currently looking at is this one right here. So yes, I do believe that unless I'm presented with information, contrary information, I do believe that we should go all the way to the upside. Now, it's a matter of positioning ourselves to be in a position to take advantage of the movements until this point. I'm not necessarily suggesting that we're taking profits here, but we can take advantage of the highs, right? And scoop a lot of pips. If we go to the weekly, that's when it becomes a little bit interesting. So right here, you can see have our area of, have our area of liquidity right here. Had a change of structure, a change of character here. Then recently had a break of structure here. Right, so, I mean, it's tricky if we consider the fact that, okay, first of all, you have this is a confirmed weekly zone. As you can see, the market tapped into it and it went up as it should, right? We had a change of sentiment because we had this low, this high, swing high, failed because this low took it out, right? This then meant that this was the first wave of an impulse, this was a correction, broke this was our correction, and we currently hit a point where we are in an impulse. So I say it's tricky because if you zoom in, there is no gap to be filled, right? If there is no gap to be filled, it means that our only area of valid demand is this zone over here. But we can look at other things like what? We came here, we collected liquidity from this low over here, took liquidity, and then went to the upside, meaning we had a breaker, ICT breaker, right? Remember, I even posted a lesson on that. If we had a breaker situation, what does this mean for this zone right here? That is a failed supply. It means it's our breaker block. If we go to the daily, that's when it becomes a little bit interesting. So we have this liquidity over here, and then we can see that the market came, took liquidity, and now it's going towards the upside. If we zoom out, still no imbalance. So what am I expecting to see? We have this nested zone right here, which has an imbalance that wasn't fully filled. All right. And then we have a potential level of liquidity because of this low right here. So the first scenario would be us selling, right? And then getting this movement right here, and then going towards the upside. That's our first scenario. Our second scenario is us breaking through this high, and then coming back to retest it, and then going towards the upside. But one thing's for sure, the uptrend is confirmed. What we're looking for is potential levels to enter from. So that's what I see on AUDCHF. So one last free setup that I'm going to share with you guys is on NZDUSD, right? And this is a quick update on it. So as you can see right here, we had this monthly supply being retested and it being in control, right? And then we have an imbalance right here, and then potential demand zone. So in as far as this is concerned, we are approaching a demand level. That price could potentially go here and then go towards the upside and maybe continue with the movements towards the upside, because we've had a break of structure here. So maybe there's a return to another block, maybe we'll go to the upside, right? Because if you look at the bigger picture, this could be a potential inverted head and shoulder forming, right? And if everything goes according to plan, we have this great imbalance over here, and then maybe the markets will go up to this level, but then that's like things that will happen in a very long time. Like I said, the reason why I do not do hard breakdowns on the monthly and those kind of time frames is because it takes a long time for those setups to play out. All right, anyways, I'm not there. I have this imbalance, and then we have this zone over here nested within the weekly zone, as the source of that imbalance hasn't been retested, making it a good zone, right? If we look at it, we kind of 200 pips away from it, right? If the market breaks through this level, we have this low right here that the market could use as a potential level of liquidity. Why am I saying this? Because we have this right here. A lot of basic candlesticks does not make a good zone to be trading from. So there's a possibility even that if the setup that I was seeing of an inverted head and shoulder on the monthly, if that does not play out, then we'll go to this area right here as a potential area of liquidity, right? But like, if we discard everything and just focus on what we have right now, we recently had a break of structure over here, right? With that being said, it means that this right here has been confirmed as a supply zone. Why? Because it has broken through opposite structures, right? I want to sell. We have liquidity here. So because it's a low close, you'll see that when you go to the lower time frames. I want to see the market reacting from this. I want to see the market reacting from this, right? And then giving us a sell setup. Because how this thing is structured, we've already had a breakout of the zone and a retest of this, and it's went into this breaker block, right? So what I want to see is a reaction from the zone and then a correction. If I see a correction on the daily, then that's my confirmation to enter, right? If that does not happen, then you might go all the way to the upside, which is very unlikely, but it's also a scenario that could play out. But what I think will happen is we'll have an immediate like setup that leads towards the downside. Then, yeah, I'm planning to buy from this level, right? But yeah, hope this made sense. And I'll see you guys in another video. For now, peace. Deuces.